Hey everyone, David Coe with the Co-Real Estate Group. I'm here today with my good friend James McKibban with Movement Mortgage. We're actually working together on a project out in North Hollywood. James, good morning. Thanks for spending some time with us. How you doing today?
I'm doing great. Happy to be here.
Cool. Hey, listen, I'm glad you're here. Look, the news right now is talking about how rates are rising, right? And you know, the right now rates are probably somewhere in the low sevens, and there's definitely talk out there that rates are going up. But at the same time, we've been advising clients that if you are a buyer, you're going to get an opportunity this year to buy in a market without having a lot of competition, and there are strategies that you can use to kind of help mitigate the higher rates. So one of the ones that we've been talking about, I know you guys do it, are rate buy downs. Can you kind of explain what it is and how you guys are using that?
Absolutely. So buy downs have become really popular. You know, you didn't see them from the year 2012 to 2023, really, because rates were so low. There's nothing to buy down. There's
Right.
a couple different forms of buy downs. You have temporary buy downs. If you've heard about the 3-2-1, 2-1, and the 1-0 buy down, it's usually something that the seller will pay or the builder will pay statistically. You also have permanent buy downs. So when you look at a rate sheet, it's very choppy. You know, like you look at 7%, it's at par. You look at 6.75%, it's so there's all these different fractionals and incremental pricing differentials. So what we try to do is, myself and team, and I've been watching interest rates when I first started in lending. My manager made me really learn this stuff. So I have a passion for it. I do a lot of forecasting for my region, but we can use a temporary buy down to get the rate much, much lower. You can go as low as 3% lower than like the current rates, which
And
really adds
that's what a
a
three two
value.
one is, right? So the three is
Correct.
3% lower for 1 year, two is 2%, and one is
Correct.
1%.
So if the rate was 7% round number of 3-2-1, year one, your rate would be 4%, year two, 5%, year three, 6%, and then it would go to that note rate. And a lot of people are going to refinance anyways well before then, but it does give you that really good comfort. A permanent buy down is where a client can buy down a rate and it'll never change. So they buy it down from 7% to 6%, that's the rate forever. And
Right.
so a lot of times if a client's just outside the box, that can help them be very comfortable. Permanent buy down, you can use the rate from a qualifying standpoint. On a temporary buy down, you can't. You have to still use the note rate because the lender knows it's going to move back up.
Yeah, and I really like that strategy too, because as buyer's agent, if we have a property where we think we have some negotiating power, we can actually bake the cost of that buy down into the
Correct.
price and then get
Yep.
a credit back from the seller. So it doesn't cost anything to the buyer. You can have the seller pay for that, but you can just put it into the price of the loan and then turn around and refi that out, and whenever
It's
you
a
decide.
win-win for the seller and the buyer. You're exactly right. And we're
Right.
seeing that strategic method used. Absolutely.
One of the other ones that you mentioned was float downs, which I know
Yeah.
that's an interesting way of doing it, especially when you've got a longer period for escrow. Can you explain what that means?
Yeah, so when a client gets an accepted offer, let's say on a purchase, they can lock the rate right away, but they don't have to. So a lot of times, if maybe the rates have just pushed up and we're seeing them at like a 60-day high, and we have that conversation with the client, we can say, listen, we can get your appraisal order, we can submit you for approval, send out live disclosures, but we just won't lock your rate. Everything else is the same. So a lot of times when a client gets an accepted offer, they want to lock, it kind of gets that step out of their way. But I do a lot of rate tracking, like I said, where maybe it's not the best window to do it. Maybe I can look at the high impact reports coming out that week, the following week. We can't predict or guarantee rates, but if the Fed's meeting or there's some of those crucial jobs reports, et cetera, and a client really trusts us and kind of are reviewing what rates are doing, we can float that rate, watch it daily, try to find that little dip. When you think of interest rates, think of them, with a floor and a ceiling. They kind of bounce between these different levels of resistance,
Every
and that's
day,
what
right? Like every day
they
rates.
bounce. They bounce every day, and you can predict pretty well within a day or two. But then outside of that, there's too much volatility. The experts aren't always right. We do our best to follow trends. The floating is a nice feature because it lets the client be in control, and sometimes they want that lower rate, and it helps us to really make them a part of that decision. One thing to note with the float is you're not guaranteed from the initial rate that we could have locked. You're kind of floating for better or for worse. But when we float a client and they're on board with that, we really manage the rate volatility to do our best to protect and improve their terms that they get.
Awesome.
One more thing also with the float is if you have, let's say, a 60-day close and you're floating and you get within 45 days and 30 days and 15 days, the shorter the rate lock, the better the terms. So that's one thing to also look at.
Cool. Well, James, I appreciate your time this morning. Look, I think what's really important in this market is if you're working and looking at buying a house or selling a house, you need to work with a quality team. James runs a great team at Movement, which is why we're partnering with them on the projects that we're working on. And obviously our team here at Co-Real Estate Group, we can help you navigate whatever journey you have to make sure you're making the best decision. So James, thank you so much for your time this morning. I really appreciate it.
Thank you. Thanks, David. Appreciate it.
David Co-Real Estate Group. Hey, listen, if you have any questions, we'd love to talk to you. Please contact me or one of my agents. We hope to talk to you soon.